welcome back. This is the Exam 2 preparation video. I will remind you a few things about the video, about the exam, is that the exam is going to be 30 questions. 14 of the questions are going to be what we call C-level questions. The C-level questions, as you see here, are going to be taken from the quiz. So it says here, taken from the quiz, meaning in the quiz, there are 50 questions and they're all these C-level questions. So wherever you see a C1 or a C2, that corresponds to the quiz. The first question on the quiz is C1, second question on the quiz is C2, so that you can see when I have a particular knowledge bit of information, this is not necessarily how I ask the question in the quiz. It is the information that goes into the question. For example, and the reason why I decided to change this a little bit is that let's say there's a true-false question in the quiz and the particular question in the quiz is false. Well, you would still need to know what the true version of the question is. So what I decided to do was in the exam prep document, I would tell you what the information is. So this is like information. And then you can see what in the quiz, you can see what the actual question would be on this particular piece of knowledge. So there are 4 chapters, 3 chapters. There's chapter 4, 5, and 6. And there are going to be basic level questions are C level, intermediate or B level, and advanced or A level. So in the exam, there's going to be 14 C level questions, all taken from the quiz. So do the quiz as many times as it takes for you to recognize and be able to answer all the C-level questions, and that will get you, a passing grade right there. Then I will select 8 B-level questions and 8 A-level questions. The C-level questions are worth 5 points apiece. So you can see 5 times 14, that's already 70%. And then the B and A-level, Bs are worth 3 points and As are worth 1 point. What this does, or what I'm hoping it does, is that it focuses people on at least learning the basics. And then if you want to strive for a higher grade, you're not penalized for the more difficult questions. The intermediate level questions are 3 and the tougher questions are worth 1. So you can take a guess on the advanced questions even if you don't know, and it's not going to hurt you. But absolutely make sure you know the basic level questions, because if you get those all right, you automatically get a 70% on the exam, even if you don't get anything else correct. Okay, so let's go through this. So I've kind of explained that while these are not the actual questions in the quiz, these are the information items that led to the question in the quiz. There are a couple for each type that, so most of them are information at the C level, but there are going to be a couple of calculation questions, or at least kind of figuring questions, and they will look exactly like this. Now, I don't give you all the 4 different multiple choice. I just give you the right answer, and in the quiz you can see all the 4 multiple choice. So I won't go through and read each of the C-level questions because you'll have plenty of practice on them in the quiz. I will just point out the couple of calculation questions so you understand what's going here. If the trial balance shows a debit balance of $600 for prepaid insurance and adjusting journal entry. So remember, we're talking about a worksheet here. So there's a trial balance, there's adjusting entries, and then you end up with the adjusted trial balance. And each of these have a debit and a credit column, if you remember when we looked at this, or if you looked at it in your... And we've got two questions that are the same, or somewhat similar, C5 and C6. So here, one of the questions I have is, this one's a prepaid insurance. Prepaid insurance is an asset, and so it would normally have a debit. So let's see, it says it has a debit of $600. And it says, and the adjusting journal entry shows a credit, so here we got these columns, right? A credit of 50. Well, when you have a debit of 600 and a credit of 500 and you sort of quote unquote add them across, well, the 50 is going to reduce the 600, right? Because this is a debit balance and this is a credit balance. So it's going to be a correct answer of 550, and that's what I have here. Now, of course, what could I put in the quiz? Well, I could do a debit. I could say it's a debit balance of 550, or I could say it's a credit balance of 550. Or if you're adding the incorrect way, I could say debit or credit of 650. So just make sure that you understand, even if you don't completely understand the worksheet, you can at least understand the debits and the credits. So this is one where there's a debit and there's a credit, so they offset. The 50 reduces, and in C6 they actually reinforce, they add together. So in the trial balance shows a credit balance of $1,500 for service revenue. Revenue is normally a credit balance, and it says an additional $400 added. So it's going to be $1,900 credit. And again, it'd be the same thing. I could do debit credit of $1,900, or I could do debit credit of $1,100, which would be, adding it the incorrect way. I will point out that I won't use in the quiz for the C-level questions. I will always use the numbers as they are shown in the quiz and as they're shown in the prep document. In other words, even if you don't completely understand, at least for those couple of calculation questions, just maybe memorize the answers, because I'm not going to change the numbers. So even if you just memorize, whatever it is, it's credit balance of $1,900, well, that'll be fine. I honestly, I just want you to be able to identify and recognize at the C level. Okay, so the other one from chapter 4, that's a C level calculation, or at least, there's something to do. If there's a $500 debit balance in the owner's account, drawing account, then the correct closing journal entry to close drawings to capital is. Okay, so there are 3 accounts that we need to worry about when closing. We need to close the revenue account, and we need to close the expenses account, and we need to close the drawing account. Now, these 2 have an intermediate step. They close to something that we call income summary, and then it goes to closing to owner's capital. Whereas drawings, the owner's drawings, skips the intermediate step and it goes straight to owner's capital. So that's why this particular one is a C level, because it is the easiest of the 3 of drawings, revenues, and expenses. So the revenues and expenses are going to be in the B level version. They're going to be the more intermediate version, but I want you to at least know that the drawing gets booked to owner's capital. And remember, owner's capital, when we talk about assets equals liabilities plus equity, well, owner's is an equity, and the normal balance for an equity is a credit. So you want to make sure that whichever one you select, that the owner's capital is in the the owner's capital is in the debit, because a drawing is taking cash out, right? So it's taking cash away from the business. So owner's capital normally has a credit, and when we draw from the owner's capital, we're going to debit it. So the important thing to remember here, even if you don't remember all of the different things, is just make sure the owner's, when you do the drawings, that the owner's capital is going down. Let's see. So there's a bunch of other knowledge items here. Let's kind of go to the chapter 4, the B and the A level questions. And there's a couple of each. So let's start off here on the intermediate. If a trial balance shows a debit balance for equipment of $5,000 in the adjusting journal entry. So this is the same thing as we had, I guess I should say, it's the same thing as this stuff, except I chose 2 very basic versions for C5 and C6, and I'm choosing a little bit more difficult for the B1. So this is a trial balance worksheet item, and A1 is also. So you have 3 different versions. Now here, rather than charting out the trial balance and all that stuff, the important thing to remember here is that if a trial balance shows a debit balance of equipment of $5,000 and the adjusting entry is a depreciation expense, the important thing to remember is the depreciation expense doesn't change the equipment. The equipment stays the same. There's just a change to the depreciation expense and accumulated depreciation. So this is not really a trick question because they are related, but just remember that depreciation and accumulated depreciation is a contra account, meaning it reduces the equipment, but in a separate account. We don't directly reduce equipment. If I go over here to the A level and I look at what's going on here, shows a credit balance of 1,000 unearned revenue. We make up adjusting revenue. Here, this is basically just testing that you understand what's going on with unearned revenue. And I won't go back through and explain everything because the prep document and the prep video is mostly just to highlight what's going on rather than use it as a teaching tool. But here, the trial balance shows a credit balance of 1,000 for unearned revenue. And you notice I don't use the word debit and credit in this one. In other words, I'm not giving you extra information. You just have to realize that unearned revenue is a liability. And when we recognize revenue, we're reducing the liability. And how much are we reducing it by? We're reducing it by 300. In other words, we had $1,000 of unearned revenue. We earned 300 of it. So there's only 700 left to earn. And because it's a liability, it has a credit balance. If I look at B2, we have 2,000 in revenue. So this is this one and this one is what I was talking about before, that revenues and expenses get booked to the income summary before going to the owner's capital. So that's here. And then A2 is also part of the chain. Now what happens is income summary gets booked to owner's capital. And so that's why I have, different levels of understanding. The most basic understanding is to know that the drawings get booked to owner's capital directly. But here I've got a series of B and A level questions that do the rest of the process, booking the revenue and expenses to income summary. And you can see what the correct journal entries are here, here, and here. Correcting some of these other ones are just more informational, so you can read these as far as knowledge questions. Here's another one that's calculation. An error was discovered. The company recorded cash purchase for inventory for 50. So what we originally did is what we're saying is that we had these two accounts, and we had cash, and we originally said we took $50 out in cash and we ended up with $50 of inventory. But that was incorrect. We left off as zero. So what the question is asking is, how do you make that correction? Well, what we need to do is we need to have taken out 500. Well, we've already taken out 50. So what do we need to do? We need to do an additional 450, and same with inventory. We need to do an additional 450. So it's going to be the same journal entry. It's just going to be the missing amount. Okay, let's take a look at Chapter 5. And this whole document is the same document that's loaded up on D2L. All I've done was add a little bit of extra space here so that I can write some stuff out. But this should look exactly like your document except without the extra space. Okay, so this is inventory purchases and inventory sales. And remember, we were focused on cost of goods sold in this one. And there's a bunch of different sort of knowledge questions here. Let's take a look at a couple of the calculation questions. Now, this isn't a calculation, but this is identifying the journal entry. Just remember, this is sort of one of the most basic items. If I had to say, what are the basic items? Well, the income statement, statement of owner's equity, and balance sheet, and how they work together, right? That's one basic item. Debits and credits, that's another basic item. And then how to record a sale maybe is one of the top 3 or 4 things you need to know how to do. So remember, it's broken apart. We have this accounts receivable and we have this inventory. Both of these are assets. The accounts receivable went up, the inventory went down. But the question is why? Why did AR go up? Why did inventory go down? Well, AR went up because we made a sale, which we record as a credit, and inventory went down because we used it. Remember, COGS is an inventory expense. It's an expense. So we need to record the revenue, and the COGS are kind of more explanatory. Why did AR go up? Because we made a sale. Why did inventory go down? Because we used it up when we sold it. So just make sure you understand what a journal entry for a regular sale would look like. Okay, so what is a buyer's journal entry? So remember, we talked about discounts. That's one thing we talked about when we talked about returns and allowances. I'm just going to say that don't worry so much about allowances and how they work. It kind of gets a little, it's a little more than I really care for you to really focus on. Just focus on discounts and returns. Look, the only difference between a return and allowance is that a return is an actual physical return of the goods. An allowance, there is no physical return of the good. You're just the seller gives the buyer a credit on account. But I want you to know what a return looks like and what a discount looks like. And remember, we have to look at it from both the buyer's point of view and from the seller's point of view, right? We're looking at purchases and sales. And so for the C-level question, the easier one is the buyer. So make sure you understand here. Here's the buyer's journal entry. This one is for when the buyer returns. I kind of walk through it, mark through it. And here's one for discount, right? So I'm only asking you to sort of memorize the buyer's return and the buyer's discount and what it looks like. And so a buyer's return, well, this makes sense because when we originally purchased it, it would have been, we got inventory. This would be the original purchase. We got debit inventory and credit and accounts payable. And then when we took some of it off, we just backed it out. We returned the inventory, so inventory went down. The accounts payable also went down. The tricky thing here, I guess, on the buyer's journal entry for a discount is to remember, well, whatever our account was, we're going to mark off the full accounts payable. But if we got a 2% discount, if it's $100, we got a 2% discount, that's $2. But we're not going to write the word discount here. We're going to mark this down from inventory. Because think about this, if we only paid $98, well, then shouldn't our inventory, our inventory would have originally been $100. And when we took the discount, we actually only paid $98 for it, so we should have the inventory reflect the amount of cash that we used. So inventory will be $98. So we take that 2% discount. We take that as a reduction of the inventory cost. Okay, the rest of them are kind of knowledge questions. Just make sure you read them and then also practice the quiz. Let's keep moving on. Here's the intermediate and advanced level questions for Chapter 5. Again, some of them are going to be knowledge. These two are kind of important to know. FOB shipping point, the buyer pays for the freight cost. Because remember, when we're talking about the seller versus the buyer, and we say FOB shipping point, that's when it leaves the seller. So that means the buyer is responsible for the shipping and the shipping costs. Conversely, if it's the seller and the buyer and it's FOB destination, then the handover point is when it arrives at the buyer. So the seller is responsible for the shipping and the goods up into that point. What do terms of trade mean? 210 net 30. It says 2% discount. I guess I should say 2% discount if paid within 10 days, and the balance, the rest is paid. You'll see in the quiz that I have a couple of fanciful things, but it's 2% discount if paid within 10 days. The balance in the perpetual inventory account is $2,300, but a physical account. So all this means is the perpetual account is the computer tracking. And so if we find that the computer is off because we actually went and physically counted, in other words, the computer thinks there's 2,300 there in the inventory, and it really needs to be 2,200. Well, we need to take 100 out. And the important thing is we mark it off to COGS. The advanced level questions here, again, here's FOB shipping point. Just all I've done here to make it a little bit more difficult is add the journal entry so that you know what it looks like. Okay, so remember up above here, I said that the easier versions are the buyer's return, right here for C27, the buyer's return and the buyer's discount. Those are the C level, and here are the A level. Here's the seller's return, and here's the seller's discount. And so just be aware of how different they look. So here in the seller's discount, we actually do use the word discount because we're not reducing inventory. We're reducing the revenue, right? And here we have to actually take back some inventory. So that's why these are A-level questions. And remember, prioritize your study habits. Make sure you get all the C questions correct. And then if you have time, go on to the B. Don't worry so much about the A's because they're 1 point. If you feel comfortable and confident that you know the C's and the B's, then you can work towards the A. In other words, you don't have to study it all evenly. Make sure you get the C's down 100%, then work on B's. And if you run out of time, then you can just sort of try and figure it out during the test as far as A's. Here's a couple of other knowledge things. The last chapter, inventory and COGS. So remember, this was the LIFO and FIFO chapter. So we've got a bunch of sort of knowledge-based questions, but there are a number of calculations questions. And hopefully you're understanding how LIFO and FIFO work is, because I don't have as much time to be able to go through in this video to try and explain. If you need LIFO and FIFO, either email me, we can do a Zoom call, or watch the video again. But what I'm going to say is that in the C level, I'm going to ask you for a number of things. So remember, LIFO, FIFO, and average cost. What are we trying to figure out? We're using that to figure out COGS, and we're using it to figure out ending inventory. So what am I doing in the C level? The C level, I'm only asking you to do COGS. So here's FIFO COGS, here's LIFO COGS, and here's average cost COGS. Now, in addition to those two things, I'm also asking you what is goods available for sale, and then what is the average cost, which you need to figure out if you're going to do the rest of it. And those are based, or at least the goods available for sale is based upon the inventory equation. Remember, inventory equation says, oops, let me undo that one. Oops, that bumped it all the way to the top. The really doesn't like that. It's interesting that it makes it get all the way up. Okay, the inventory equation is boy, I reset everything. The inventory equation is beginning inventory plus purchases equals COGS plus ending inventory. My handwriting's getting worse. So these two together are what we call goods, and there's not really an acronym for this, but goods available for sale. We'll call that it. This thing right here. And all it is doing the thing that we've done before when we start working on these problems is, here's the beginning inventory. That's the first part. Purchases. We only have one purchase here. So 10 times 10 is 100. 5 times 3 is 65. I will point out that when I first uploaded this document, I accidentally used 12 down here. I used 12 for some of these, but I fixed the document very fast. But if your document is showing 12, that's wrong. Reload the document or re-download the document. And the reason why is because while 12 works for LIFO and FIFO, 12 doesn't work for average because it gives you an average cost that's not a whole number. It gives you some weird number. And I'd prefer for tests and quizzes to have things that round off pretty well. So anyway, just be aware of that. So here, this would be 165. That's the goods available for sale, because that's exactly what the definition is. Goods available for sale are beginning inventory plus purchases. Here for FIFO, if we're selling 12 items, just remember we start counting from the top down for COGS. So I'm going to look at all 10 of these, and I'm going to look at 2 of these. So just like I have here, 10 times 10 and 2 times 13. For LIFO, we're working up. Remember, LIFO means last in, first out. Last in means the most recent one, which would be the purchase. So we'd take all 5 of these, and then we would take the rest. 5 plus 7 is 12, so we'd take 7 of these, and that's what the COGS would be. And the average cost is, well, you have to take these numbers. So we'd already figured out this is 100, and this is 65. So together it's 165. There's a total of 15 items. You just take 165 divided by 15, it ends up being 11. Whereas when I did 12, it was some strange number. So I felt better about using this. And so that's the average cost. And so when we do COGS from the average cost, we don't have to go up or down, right? We don't have to worry about that at all. All we have to do is we sold 12 items. We sold 12 items. Oh, I didn't even actually put how I got it here. We sold 12 items times, well, we've just figured out we need the average cost. 12 items times 11 is 132. The rest is definitional. And then, of course, as I mentioned before, if the COGS was going to be the C level, well, then the ending inventory is going to be the B level. Now, it's not as difficult, but to get to the ending inventory, there's usually two methods to do it, but I'm just highlighting the easier method. So if you go ahead and you calculate all this, we already did that. 10 times 10 is 100. 5 times 13 is 65. And therefore, that's 165. And if you know that it's 165, and if you know how to calculate COGS, right? So COGS here is going to be COGS for FIFO was 126, right? You'd have to go ahead and calculate that, and you'd say 126 minus 165 is 39. And I did that for all of these, right? The other way you could look at it is, I guess if you wanted to look at it in a simpler, there's a total of 15 items, right? There's 15 items. And if we sold 12 of them, that means there must be 3 items left over. So which items? Well, LIFO, we start from the top and count down COGS. That means the last 3 items are going to be here. So if I said, well, purchase 1 had 3 items left, right? So 3 times 13, guess what? That also equals this way. And if I do that here, we sold 12 items. That means there's 3 items left. But when we counted COGS in LIFO, we used up all the 5 and we used up 7 of these, right? So what was left? 3 of the $10 items. And guess what? That's the answer. So you can do it both ways. You can either count the items that are left over, or you can take the total value, the beginning inventory plus purchases, minus the COGS, and that also gets you ending inventory. And same with here. Here, this is average cost is even easier. We're not looking at which items. Remember, we don't even worry about this now. We calculated the average cost is 11, and if there are 3 items left over, guess what? It's 33. What's this? This is the lower of cost or net realizable value. The actual working the problem here is much easier than the I guess the rules involved. But here, all we're basically saying is we never mark up if it looks like. Think of net realizable value to some degree as the market value. If we bought it at cost, this is what we bought it for. We buy at cost, and if later on the market says it's worth more, we never mark up. But if later on the market says it's gone down in value, we always mark it down. So literally what we're saying is whichever value is lower, the original cost or the net realizable value, whichever one is lower is the one we're going to use. So what I'm doing here is saying, okay, I look at these two numbers. Item 1, we bought it for 600. It's worth 700 now, but I'm using the lower value. Item 2, I bought it at 500. Now it's worth 200. I'm using the lower value. So these two add up to be 800. Here, I'm going to say for these two, this one, well, I'll walk through it here. What you want to do is you want to identify, are they the buyer or the seller? For questions like this, asked to receive goods, they're the buyer. The goods were shipped FOB shipping point. As the buyer, it means they own the goods. Remember, here's the seller, FOB shipping point's there. Here's the buyer. So it's our goods while it's being shipped. The goods were not included. Not included is wrong because it should have been included as soon as it was shipped. And what's the adjustment? Well, we have to add 5,000. So that's how you figure through that. Goods available for sale. This is kind of just making sure you understand the inventory equation. During period of inflation and deflation, these are tougher. I'd say the thing to focus on is the reason why LIFO was created is that during inflation times, LIFO would lead to lower net income and therefore lower taxes. That was the purpose of it. And so you can read through this, you can look at the book, and you can also take a look at the video. But to go through the whole explanation again is probably not time efficient because, first of all, if I put it on there, you'll just have one of these. And this is mainly what I'm trying to test, is that you understand that LIFO was designed for inflation, and so it leads to lower taxes. Okay, well, this happened to be quite a long prep video. Hopefully, I didn't mean for it to be that long. I was hoping to be 20, 25 minutes, but I went over a few. I think it's partly because I had the ability to write more. Any case, if you have any questions, let me know. The test will be open from, I think, Saturday through Wednesday. So if you have any questions, let me know.